Okay, so hello guys, I'm back. Continuous with the EX1. Today again we're looking at the dollar index chart. Yesterday we'll discuss about this range from the side to the slow. It feels like we also been tagged and we're just trading inside this what we call it, the mean threshold of this very short of block. And now as we can see, we are in this fair with the gap here. Also if you'll notice there was a small volume imbalance which was created in the price action here. We have came down, fill in that imbalance. Now we are just rejecting out from there. Look how price will be from here, but um, it looks like it made low of the week, not picking up the tops and the bottoms, but it looks like so. Now um, we have discussed about inversion fair value gap, which was this one. Okay, let me show you this one. Talking about this inversion fair value gap, as I was already told that if we came down, act as resistance, we done so. Let me show you on that on the daily time frame. Yeah, okay, so this two levels represent that. So look how we came down. We just came up there once here and right here. So this acted as a self resistance, and now we are exporting up from there. This Thursday. Yesterday was FMC, so created a lot of news driver here and there. Today we'll look at how price behaves from here, and the set of market's gonna favor it. Well, what I think now we've taken out the sell side liquidity and we're just back inside the range, so we might get something like from the slow to that high where we are. Yeah, that's what I was thinking. So from this low to that high, this is also a range. If we came down in the equilibrium, now we're rejecting from the discounted level of the range. So it's gonna be good for the price to react from the discounted level so that it can create more orders for buying. Okay, removing the annotations, and we have our naked chart analysis for the DXY. What you can see here is we have just respected the fair value gap in here. We have not traded through that, it was just the wick mitigating the order block. Now we're rejecting from there. Just consecutive down candles. I want to see this candle, the next candle to be traded through this consecutive both candles. That will act as an order block. Going on to the lower time frames. That's gonna be a 240 minutes. Okay, so on to the 240 minutes time frame. So what we are looking at the dollar index again. Look at this candle. This might be act as a breaker here. If it gets trade through, we come down and export. Also, we are having this volume imbalance here. One thing I would like you guys to notice in here that we've created this fair value gap here, and also this fix became for the buy side. For the buy side, this one is a fair value gap too. So the 50% of the spec will be the consequent encroachment of the wick, consequent encroachment of the wick, which will add us in the mid range, the mid level of this one. Okay, so now let me have the levels. Okay, now we are in the 1 hour time frame, and this is showing us how we traded. Look, Monday trade higher, we did a reversal here. Tuesday also came down, Wednesday also came down, and the FOMC created a whipsaw in the price action, and that was around this one, yeah. So look, we have taken out a short-term high here. Talking about this one, this was a swing high. taken out there, rejected. Again, came up. For me, this one and this one. I would like to visit somewhere here, this area. It usually shows a willingness to go higher. And now, look, this was a gap. We trade through that gap and we made a order block. So now the scenario is I don't think we're gonna come back here. I don't think so. That's why it's tricky to participate in the London session. But don't forget the most explosive. No, not that explosive, but the most expanded range you will get. That will be on the um, London session. Now it looks like a mitigation here. The time, okay, it's a 2:30. Expanding. Okay, now let's have a look at the 15 minute. It looks so came down. Um, well, I think so. This will become a breaker here. These consecutive candles, and we will look to reach the upper area. Okay, so what's the likely next round liquidity here? For me, the next round liquidity is just level the gap, and ultimately, I want to see the swing high to be taken out. Well, let's once again visit the daily time frame and look what we are doing in here. You can see how beautifully we have treated inside this one. Now we are rejecting. Okay, sorry about that. So the weekly open, we trade down throughout the week, and now we're rejecting from here. Um, in the 5 minute time frame, what I told you, I do think that this consecutive of candles, the down move. So what's here? It's a breaker. We're taking out the sell stops here. So it's gonna become a breaker here. And the 1 hour time frame, it looks like this. Okay, so now let's have a look for the euro. Daily time frame. The daily time frame for euro USD. We have not respected this down candle, but we are respecting this down candle. Also, there was a gap, so we have filled the gap. Now we are coming down. Let's have a look at the weekly. Weekly was there also a gap. We filled that gap. Now we are rejecting from there. Let's have a look at the 4 hour time frame. Right now, if you'll see what we're doing here, rejecting to the downside. It looks like a pretty aggressive run here. And this is what I was talking about. And slowly let's go on to the 4 time frames. This all here is a trend line phantom. And we will look to take that off. Oops, there's some sort of internet connection problem. Hold on, let me share that once again. Okay, so this is what it was. So down move. I think so. This will support the price. Okay, so as you can see, the market is here. It looks like a breaker in here, and I don't think we are going too far up. I think so. It's a breaker here, down, up, down. So, so we'll look how support price here or not. And uh, I want you guys to see where we are in the price right now. There was some sort of internet connection problem, so we'll restart. So Euro USD, we have came down. We're respecting the fair value gap in the order block here. For me, let's go to the 1 hour time frame. Okay, so what it looks like to me, we have traded up, then down. It was a bit short. Here the back and forth price action. From this range to this range, we have came up to mitigate the orders in here, and also this range is just around the mitigation block here. So coming up in the 15-minute time frame, well, I wasn't expecting this much of a movement for the upside because I I think so it's bearish market, and if it so um so I don't think we are going to get a rally from here downside because look at this one. We have came up, mitigate the orders in here, and the down move, up move, down move. It's breaker in here, consecutive candles here. They will act as a breaker, and I'm usually basically targeting this. I'll show you that. Yeah, so I'm targeting this level here. I want to see this level, and this was just give me just a second.